Reimagined. If you put aside the healthy rebound in Bitcoin's price this week, it's hard not to feel as if the crypto industry is under attack. Regulators are sounding tougher signals on their concerns with Bitcoin and other crypto assets, and mainstream economists and so-called no-coiners are piling on. In one example, Senator Elizabeth Warren warned this week that allowing cryptocurrencies to take a more dominant position in the financial system would be at the whims of some shadowy, faceless group of super coders. Crypto Twitter's meme generators had a field day with that one, but it did speak to a deeply held negative view of the industry among Warren and her ilk in Washington. Meanwhile, China is continuing its crackdown against Bitcoin, and European officials continue to express concerns about shadowy activity in this sector. Much of this is familiar. Much seems ill-informed, or if you are more conspiratorially minded, a deliberate intent to stop cryptocurrencies from disrupting the legacy system. But in my view, the crypto community does itself a huge disservice if it just dismisses these criticisms out of hand. In some respects, the community shares blame for the negative perceptions that have emerged. The behavior of a few tends to encourage outsiders to see the industry as rife with scammers, hedonists, get-rich schemers, and just flat-out fanatics. That's an unfair, broad-brush description, of course, one that maligns the vast majority of passionate, committed believers in crypto who are building innovative solutions to societal and economic problems. But it's worth asking if the kind of extreme behavior that stirs up these negative perceptions stem from something fundamental about the technology, or whether they are the unavoidable outcome of the inevitable Wild West environment this highly disruptive concept breeds. And let's face it, there are legitimate criticisms of this industry, and they warrant attention. So today, we delve into the soul of crypto. We'll do so in a manner that breaks from our usual Money Reimagined format. We're going to take two recent, well-reasoned essays by authors critical of the sector and dissect their arguments. We'll consider what in them has merit and perhaps what doesn't, and what, if anything, are the lessons to learn. For this navel-gazing exercise, Sheila and I are joined by Noelle, the head of market insights at Genesis, which I must disclose is owned by DCG, the parent company of CoinDesk. Before recently taking this role, Noelle was managing director of research at CoinDesk. So let's get started. The first is a long essay entitled I Token, the untold story of the hole in Bitcoin's heart by Brett Scott, a writer and theorist who focuses on the meaning of money. We'll put links to this and to the other essay in the show notes to the episode. So listen, I mean, it was a long piece. It's a classic Brett Scott piece. I don't know if you guys have read him before, but, he really, I think, intently goes after, almost an anthropological look or even a linguistic look at, what we mean when we talk about money, in this case, what we talk about Bitcoin. And, there's some really interesting ways to get at, I think, a core problem with Bitcoin, right? Is it money yet? I've always thought, I emphasize the word yet. Like, I feel like there is this transition that it's through, and that it would be impossible to adopt, basically come out of the gate and have what economists describe as the three, qualities of money. This, unit of account, is it a medium of exchange, or is it a store of value, and that money really should have all of those three properties. And it seems to me that you just can't instantaneously have that without going through a process. And therefore, he talks as if, Bitcoiners have adopted some of those terms and just applied them at will. And then, in his words, described the function of it rather than what it is. What exactly is a Bitcoin? What is this token? And it's a compelling problem because, it's as if he's saying we're obfuscating, we're sort of talking about what it can do rather than the fundamental structure of what it is. And but at the same time, I've always thought, like, money really is a function. I'm not sure it is a thing. It is one of the books that really, influenced me was Felix Martin's A Biography of Money. And he just broke down the metalist argument of money, that it has to be this gold thing. It's not, it's a function. It serves this debt clearing exercise. And in that context, it strikes me that every effort to describe money is something of a fiction, that you're creating these ideas of what these tokens are, when in fact they're a stand-in for a process, a mechanism. But I might be, misreading this. So that's my initial thoughts on this. Sheila, what was your takeaway from this?
Yeah, well, I really enjoyed, I think it's one of the better written critiques of the Bitcoin ecosystem, which I think is what is the criticism of, is kind of thinking through, this reality that anything that we deem money is basically assigned a societal cultural value that is held up by the activities of a group of individuals, entities, shadowy supercoders, whoever it is that surrounds that system with information. And some of that information is designed, deliberate propaganda. Some of that information is very evidence-based, but it isn't always easy to tell the difference. And so what I appreciated was that I don't know that Brett went into this parallel as much as others necessarily have, but this idea that we've talked about a lot on the show, that money is a meme. It's kind of one of the first memes, and it has value because we have decided as a society it has value, and Bitcoin is no different. I think because of the novelty of Bitcoin, because of the way that literal, I suppose as we call them memes, like internet memes, are so related to the price of Bitcoin and how the Bitcoin price index tends to fluctuate based on commentary from public figures or whatever it might be, whether it's Senator Warren, whether it's Elon Musk, whether it's whomever, right? Like you see that a fluctuation, and it's very easy to track the comments that are made, the price, adjusts. It's much more visceral, I think, that awareness, but it is not different from the dollar, the pound, the yen, the whatever it is, which also have systems that are just so entrenched in our cultural consciousness that we aren't necessarily interrogating them in the same way. So I took it as a criticism that could actually fairly be made in a different parallel article about the legacy financial system, and that was what I thought I took away from it. Is all these systems similarly have this kind of work, let's call it, that's being done to support the value that we provide to these units of account, stores of value, medium exchange, things that we call money.
Yeah, I totally agree with everything that you said there, Sheila. I'm going to tease some of them out a bit, though. And you both know that I actually love the philosophical pedantry that goes into a lot of the vocabulary that we use in our industry. I've often said that it's one of our big weaknesses. We tend to misuse a lot of words, and that creates constructs that end up hindering us going forwards. And let's, pour one out for the regulators that not only are trying to figure out our vocabulary, but how to fit our vocabulary into their vocabulary and make some kind of sense of it all. I don't have a problem personally with defining something by its use. In the end, we define a glass by its use. It holds liquid. Now, the difference is we can make many, many glasses, and the value is that it holds the liquid that we want it to hold, but it doesn't have any scarcity. Now, Bitcoin has a use. It is actually a technology. So while it does have the value that we ascribe to it, it does also have an intrinsic value. It's a technology. It's a database method that enables you to transfer information from one peer to another peer without going through a central authority. That's an intrinsic technological use. For it to have a lot of value on top of that, yes, that's the value that we ascribe to it. But that doesn't take away from the fact that it has a utility underneath it, just like a glass has a utility, and we will pay more for a glass that we know there happen to be very, very few of them, or one that is particularly beautiful. So describing Bitcoin by its functions, I don't have a problem with that. What I do have a problem with is how we are all just accepting this definition of money that we are told is the definition of money. If it doesn't satisfy the three properties that we all know by heart at this stage, then it's not money. And I keep thinking, well, why? Why are we just accepting this definition? Why can't it be money if it doesn't satisfy all three? Why can't it be money if it doesn't satisfy any of them? Why can't an NFT be money? Why can't a piece of paper that I ripped from my notebook and scribbled IOU on it be money? Money should be the me. Money, as you said, Sheila, money is what we deem it to be.
Look, this is the essence of it. I think this is the, and the question is, how do you transition to it being widely accepted? And Brett zeroes in on the idea that the unit of account is the most important one in his mind. I think that's a really compelling argument, right? Because I think one of the weaknesses I think that you face when you talk about Bitcoin becoming let's call it, I agree with you, Noelle, it could be, money doesn't have to necessarily have all those three qualities, but like, if we're going to talk about something that is universally accepted, then I think it does have to become a unit of account, so that when I sell you, I'm going to sell you my laptop and I say its price is, 1/10 of a Bitcoin, then, we're just going to accept that to be the price, right? It's not, I'm saying, hey, it's a few $1,000s, but, pay me in Bitcoin, right? Those two things are quite different. And so the denominating element there is the real challenge, because I think until you get to this wide base of acceptance, it cannot be a unit of account, right? Except within, a really small core of community for whom all they're ever going to want is Bitcoin. And so that's the challenge, right? So then how do you go from that small community to a wider community? And I think this is where the language tricks that both of you are talking about kind of come into play. And some of them, I think, do a disservice because they distract and they obfuscate. Others, I think, are just necessary, right? I mean, and to Sheila's point, all money has gone through this process, right? As I probably overly quote Yuval Harari, because I just feel like he really nailed this, and talking about stories and human beings and civilization essentially is founded upon our capacity to tell stories. So essentially fictions that we use as a framework to do things. And in his words, money is the greatest story ever told. It's, what is a dollar, right? What exactly is a dollar? And it is I think, I just wonder whether it would ever be possible for it to serve the function that it does, to ultimately also to become a unit of account, if we didn't have in our head this physical representation of a dollar, even though, of course, it's such a tiny piece of the actual money supply, but that it has become ingrained. And so I think leaping into Bitcoin is difficult because people have got in their heads this need for something physical. So anyway, the point is, like, if we accept that Bitcoin could be a valuable form of money, and Brett's critical of Bitcoin on all sorts of other levels, but I think for this purpose of this exercise, he's not even criticizing that. He's saying it might be, but how do you get there? What would be the right way to, I suppose, tell a story around Bitcoin such that it could be more accessible to people and they'd understand it? Because we all know, we meet, like, the I don't understand this thing response now, 10 years in, is still the most frequent response you get from normies, because it's this leap. How do I get, what is this digital thing, so what is the right story that should be told?
Yeah. And I think that story that we're trying to port over is the story of money. And so I'd love to just get back to Noelle, to your point, like, do we need all three, medium of exchange, unit of account, and store of value? Are all three necessary, or does one or two, or are those even the right three? Are there other things? So maybe it's worthwhile, just for those of our audience who don't necessarily think about money all day long, to talk through these three different functions of money, standard kind of understood functions of money a bit, and how Bitcoin specifically is or isn't one of these things. And so maybe we start with medium of exchange, because that's kind of the easiest one, I think, for people to understand, which is, when you think about a barter system, you're just exchanging two goods, and you're kind of, I want this, I have this, cheesecake or whatever. I don't really like cheesecake. I have cupcakes, and, Noelle has earrings, and we decided we're just going to trade those things because I have more value in the earrings and she has more value in the cupcakes, whatever it might be. And a medium of exchange, when money is used in this way, it's intermediating that exchange. So it's avoiding inefficiencies in this system. And basically what you're able to do is, just because I don't have the thing you want, like, what if, I don't really want cupcakes, I want earrings. You don't have earrings, but you really want cupcakes. Well, money enables me to, I get money from you instead of getting your earrings, and I can go out and I can buy earrings from someone who has them. So it provides this alternative to a straight up barter system where you're reliant upon having the exact things that you want at the exact time. And it enables you to go out on the market and find other things that you want. It's not a necessarily super concise imagination of medium exchange. That's kind of how it works for those who haven't thought about that concept before. So maybe I'll just hand it over, Noelle, to you to think about, Bitcoin as a medium exchange, because this is kind of one of the more recognized and accepted functions of Bitcoin. But I'll turn it to you to walk us through that.
Absolutely. And I'm going to take that and actually go off on a tangent, which I love to do. But to that point, it highlights that we don't understand money. I think that is one of blockchain's best gifts it could have given us. And I've said this before, that it's not necessarily the answer, but it is a tool that enables us to ask better questions. I used to work in traditional finance and I thought I understood money. It turns out I was conflating money with numbers, and all I knew how to do was just move it around. To me, that was money. Money were numbers on my screen. And it wasn't until I discovered Bitcoin that I understood that I didn't even bother to question what we were doing. It was just what you do. And I know for a fact that my former colleagues and most of the people in traditional finance today are not asking those important questions, which in the uncertain times in which we live, now more than ever, is a very, very important thing to do. It's only by asking better questions that we are going to arrive at better answers. We don't know what that is yet. Maybe it's Bitcoin. I actually don't think Bitcoin is going to be the money that we are going to end up using. We'll get to that, I imagine, later on in this conversation. But one thing that I did want to, going back to what you were saying, Michael, about the understanding what it even is, hats off to you for what you've done at CoinDesk for convincing everyone to no longer use those stock photos of physical Bitcoins to illustrate stories of Bitcoins. That always used to drive me mad. And this is a shout out to all other crypto media. Please stop using those photos, because all that they do is reinforce the idea in our heads that Bitcoin is physical money, and that may be easy, but we're not here for easy. And the more that we entrench that image, the more we're going to, in the end, confuse the readers that we are trying to introduce to this entirely new concept.
Look, it's a really good point as well, because I mean, at the end of the day, like the way I think about crypto generally and blockchain as well, is that it is the protocol system for value exchange that is needed for the digital age. And the digital age, by definition, is not physical, right? So maybe this problem is as much about how society itself transitions to an understanding of what digital means, right? I mean, this whole conversation around NFTs is part of this problem, because people are like, well, like, what is the NFT? They think of the art on the screen as being, the thing. And of course, the NFT is not that. It's a signed certificate of authenticity to the creation in a digital form of that asset at one point, right? And therefore, people are sort of still grasping for the idea, well, how do I take my Beeple and put it somewhere and do something with it as if it's physical? But remember, like, the classic story of the rye stones. And by the way, Sheila, I know we've only gone through one. We'll try to get to store of value in a moment. But the rye stones, which every time you go down to money, everyone starts talking about rye stones and the island of Yap. And so, and I'm even not going to tell the story directly to allude to the one thing that struck me most about it was the story that you often hear people discover, that one of the stones, fell into the ocean and sank there, and it was still recognized as being a form of money held by the owner of that stone. And then you realize that these tokens are just tokens, right? They are not the money. They are not the thing at all. They are a device for recognizing. And by the way, if we can all agree that balance is there, that this wealth is there, then you don't even need the stones, right? So you just need a ledger. You need something to keep track of that. And that ledger, by the way, just could be in your heads, as it kind of was in the case of the people of Yap, but it's going to get more and more sophisticated. So we need a recording device for that, right? And that's kind of what blockchain is. Just as, by the way, a bank account and a bank system is for and FedWire and all these other systems for tracking and keeping track of transactions. So ultimately, that's the functionality of it, and the token is this thing that we need as a sort of a mimetic device to then figure out how we make these associations. And the one thing I was going to say before I go to store of value is that I've often wondered whether the future may move to a world where there is no single form of money. That in fact, money becomes the protocol, so that, you imagine a world where everything is bartered, but there is infinitely perfect pricing on that, right? It's an unimaginable world, because that's the problem. It's like, we don't know what the going price of this table or this table is or what it is. But if you could imagine the level of bandwidth and informational power that could bring that together, then you could argue that there's never a need for an actual intermediating value in there anymore. It's just literally that I'm going to sell you a quarter of my table in return for a fifth of your laptop. And we'll all understand what that is, and that transaction of ownership will take place, and the protocol that's actually managing that in a decentralized way is the money, right? So there's like so many different ways you could twist it because it's all an invented system. In any case,
yeah. And so what I find so interesting about that, though, is right, it really, you wouldn't think it'd be such a psychological leap, because anybody who's used a credit card or done anything point of sale, you're not handing over the actual physical money anymore. That's just a relatively unusual transaction in certain parts of society. And people that are already in that world are the ones who are more prone to be, using things like Bitcoin in the first place, right? So you think it wouldn't be this gigantic psychological leap, because certainly when I am swiping or chipping or whatever it is at the, for the coffee, I'm no longer handing over the $25-35 billion it now costs for coffee or whatever it is, right? I'm not doing that physically. And in fact, when I imagine my bank account, I mean, I'm not really imagining that my name in a safe deposit box has the amount of money in my account, and some, robot or whatever is like taking the dollars and putting them in some way. That's not what, it's all digital anyway. So I don't think if anyone pauses for a moment to think about their own accounts, like what they hold in whatever denomination that they're transacting in, generally speaking, dollar, yen, whatever it is, pound sterling, that they're really imagining the physical movement of that paper and those coins anymore. And the same, so our need to almost rely on, to your point, Noelle, those images of a coin that's metal and that has, I like to think that we can have a little more faith in some of the community to understand that is no longer necessary, and the representation of it is actually what matters. And then that would be a really good segue, I think, into unit of account. And so, Michael, maybe you can take us all the way there.
Yeah, so we'll get back to store of value after that then, right? So unit of account, I think that what's interesting, I think Brett Scott would probably say is like, okay, it's not really the point about the tokens. It is the language that it enables us to understand the value of this thing. So, if we didn't have a dollar as a reference point, in this case, a unit of account, or if you're in Switzerland, what the Swiss franc is telling you, I know in my head that there's more or less a translation I can do of what that is in dollars. I can then start to make decisions about whether I want to buy that thing or not, right? And so that's really, in some respects, the most important functionality. And it's hard to see how that goes away, right? My idea of this protocol that creates perfect digital barter, how would you get there if you don't actually have this common language that I think the unit of account functionality has? So the unit of account is like, it is the thing in which everything is essentially expressed in its value. I do want to throw to Noelle, but why don't we just put store of value out there? Because I think this is a good one for you, Noelle. I mean, this is where the Bitcoin community make the argument that that's the first use case, if you like, of Bitcoin, that in fact, it's a process. It starts as a store of value and essentially becomes accepted for this. And then it moves into being so widely accepted for its value that you start to use it as a medium exchange, then ultimately a unit of account. And that we're at that phase right now, and that the Bitcoin has that value because it is a proxy for digital gold. It is a digital version of this scarce asset that I want to hold. And that's a compelling argument. What Brett Scott says is that is a confusion between the concept of price and value, because Bitcoiners will talk to the fact that the price keeps rising, 33,000, 40,000, whatever it was just recently. It's got to 65, and then that says, look, it's got value, but he'll say, no, that's price, that's not value. And so, what are you holding as a store of value? You're holding this thing that has this volatile price, and yes, you've made money. You've been holding it for quite a while. But I'm just not quite sure that's very different from thinking about gold in the same way, right? Because I think that only reason I'm going to hold gold is as something that I think is going to hold a relative monetary alternative value to what my stocks are. And no one, would dispute that gold is a store of value. That's a widely held concept. So I always see that this is in a transition, that of course it's volatile right now, because that store of value process is still a long time to go before people accept it widely, and that Bitcoin is becoming a store of value. Anyway, I've spoken way too much. Noelle.
We've often talked about Bitcoin being an emergent store of value. I mean, let's recognize that it's still very, very young. So an emergent store of value, much like gold, as you mentioned, like real estate, art, anything that we know is scarce and that we think 20 years from now, 50 years from now, will be worth more than it is today in relative terms. Again, in relative terms, that's very important compared to the fiat currency that we all know is going to be debased. And that, to be honest, is my personal preference, my personal favorite use case of Bitcoin. I'll buy that a lot more readily than I will that it will one day become the unit of account. But when it comes to value versus price, I have two very quick points to make on this. Value versus price that I think you mentioned before, Sheila. Again, value, even talking about value in the markets today, why are we wasting time doing that? What does value mean when you have interest rates near zero, when fundamentals no longer matter for prices? So again, that's a sort of old-fashioned conversation to be having. Unfortunately, I mean, I'm an analyst, this is unfortunately, but you mentioned, Sheila, and I'm very grateful you did, you mentioned vaults, and this is fascinating. This ties into the physical representation that we've been discussing. It ties into the store of value idea, and it ties into something that I've been thinking quite a lot about recently. I mean, Genesis, one of its business lines is a custodian, and what many people do not get when you custody Bitcoin is that it is not sitting in a vault somewhere. It is not, you know, set aside for you, because Bitcoin lives on the blockchain. This is an entirely different paradigm. What custodians are custodying for you is not your Bitcoin. They're custodying access to your Bitcoin. And this access takes the form of a sequences of characters. How do you custody that? And this is especially relevant today when we have some of the world's largest custodians getting involved in crypto custody. And so many traditional investors like, yay, they understand custody. I feel comfortable and safe. What people don't get is that the fact that you are good at custodying bonds will make you good at custodying equities, probably because it's similar technology, similar rules. It will not make you good at custodying crypto because it's an entirely different technology. It's an entirely different mind space of what is it you are actually doing. And this ties into the confusing vocabulary swirling around the space. We're calling it custody because I can't even think of anything better, but it's not the same as custodying any other kind of asset. And most investors are still thinking of Bitcoin as a thing that you hold somewhere safe. And that can lead people into making some dangerous assumptions about security. So again, this is one of the things that I've been thinking about.
And I think part of the problem with that comes from the all-important role that regulators play in defining what you can and can't do with assets as an intermediary and how you interact with people. So they use the word custody, and then that has to become the language that's then applied to what is ultimately a mathematical process, right? You cryptographically secure Bitcoin by building, you know, all of these barriers around it, multi-sig technology and so forth. Yeah. You don't literally put it in a vault, although I did find it really fascinating that when Zappo introduced their like extremely difficult to break, custody solution, they literally put the private key in an underground vault in an old nuclear bunker in Switzerland, and locked it up for ages underground. You know, that was like, we have to imagine the impenetrability of that to somehow show that it's like super safe. Anyway, I think let's move to this second article we're going to discuss now. I think that actually, you know, Brett Scott gives us actually an entry in there because he's, you know, at the end of his essay, he's talking about, okay, what is it that could help Bitcoin get out of, you know, it could find its soul and restore this hole in its heart that he keeps talking about. And he thinks that, you know, maybe El Salvador has the solution because they're, in a way, you know, it's a government that's recognizing it as legal tender, and therefore it could just become medium of exchange almost by diktat from a government, which I think gets us to this point where, you know, well, is the only way to make this transition, you know, is it the entity that holds a monopoly on violence, right? The state is the only entity that can actually force you to accept this medium of exchange. This is not to call governments violent. It's literally the one of the many definitions of a state. And so, you know, and I look, again, we live in a digital society. This is a thing that's kind of breaking away from the nation state. So how would we build a governance system around that?
So should governments just adopt crypto assets as national currencies? And is that a wise thing to do? And so the article on IMF blog really kind of teases out some of the cons really about that and suggests that that is really not a good idea. But I think it leads to this question, at least for me, which is who gets to decide? Who gets to decide which of these three things we've been talking about, unit of account, store of value, and exchange, like who gets to define that and decide whether something meets those or doesn't meet those? And should it be the users of the thing, or should it be something more like a government that has other responsibilities, among not the least of which is, security and safety for its citizens and, all that kind of thing? What are your thoughts on that?
My thoughts are that this is depends on who you are, how you answer that question. For instance, while, as you mentioned, the role of governments is to protect the consumers, they're going to do that. They can do that through regulation, and regulation needs definitions. I mean, the basis of regulation is very detailed definitions, whether something is or isn't something that falls under this or that rule. So they need those definitions, and they're going to rely on those. But the market is going to do what it's going to do anyway. We're seeing an emergence, the flourishing, if you like, of metaverse economies, where you have avatars that are exchanging for huge sums. I was looking at some of the NFT platforms today. NFTs, pursuant to your point earlier, Sheila, are a representation of value that is entirely imbued by us. We happen to really like this particular board monkey, or board ape, whatever. I mean, I'm a bit behind here, but and we are willing to pay $20,000 for it. There were tons of them changing value around about that time. But then if we exchange that for something else in a video game, that is a type of medium of exchange as well as a store of value. And do we have regulators defining this for us? No, we are defining this. We are using them however we see fit, and we are meeting counterparties, people like us, that are happy to exchange in the same terrain as well. So while regulators are going to need these rules, they're going to need these definitions, the market is going to do what it's going to do anyway, and the regulators, as we have seen, are going to be spending a lot of energy trying to play catch up.
Yeah, it's probably worth my just dropping in that Senator Warren and I are not related despite having the same last name. However, she was my professor at Harvard Law School, and she was the professor of my very first class on my very first day of Harvard Law School. So when I see her now, I think, wow, isn't it funny that we're both very differently involved in the same space? But anyhow, your point is a really good one, which is that I think, the market is going to do what the market's going to do. And it leads to this question about whether we're going to wind up inevitably with a parallel system where there is government sanctioned, let's call it, money. Whether that has a crypto component to it or not is a really interesting question, not just in the US. That's getting most of the attention right now because of the activity that we're seeing and the statements being made by various people, including, of course, Senator Warren. But that isn't going to have necessarily an impact on what kind of happens outside of that. And it may be, to your point, we already see thriving economies in gaming. That is very much real. The portability of those tokens or of those assets from gaming environment to gaming environment remains something that is nascent, I think. Like, we're still seeing the beginnings of that kind of unit of account almost, in a way, right? Like that kind of development there, I think, is something that's going to be really an interesting thing to watch. But that is something that is not going to wind up being regulated. Are you going to be able to stop people from taking their, I don't know, I'm going to reveal their wand from one and they're buying their bow in the other, just to give one kind of example. Is that something that's going to become illegal to do? Is that what we really want as a society? Is that something that's important? Now, it's one thing to say, can I take my wand and go buy my coffee? That's a bit of a different question. And that is where I think the government does see a strong interest in regulating or having a very strong point of view that determines what we are enabling to use as a unit of account. And again, just to make this very, very clear, unit of account is something you denominate other things in. So that it's, again, $10 for a cup of coffee in San Francisco, perhaps $3 somewhere else that's not San Francisco, but you can make a comparison because the dollar is the unit of account across all those things. If you suddenly had won-denominated coffee, it might be 12 wands in San Francisco, and 4 wands in some other jurisdiction. But we don't tend to use these other kinds of things as a unit of account, in large part because they do not have governmental support, and there isn't a system that has been built around them that enables us to do that efficiently or effectively.
Well, actually, I live in Europe, and I remember when we made the change from national currencies to the euro, the unit of account officially changed from pesetas. I live in Spain, from pesetas to euros. But for about 3 or 4 years, prices were quoted in both. Why? Because we were struggling with the mental math. I mean, it was, you know, the 35,000 pesetas, and now we're talking it's 106,800. People didn't understand the mental maths. And so without having to, it wasn't a requirement, prices were quoted in both. And the point I'm trying to make with that is that, again, unit of account can be what we say it's going to be. And if, for instance, your coffee shop decides to want to denominate things in ones, it actually can, but it's going to lose customers because it's going to be confusing. And this segues very much into the next article that, you know, I want you to give us a summary of, Michael, which is about legal tender, using Bitcoin, for instance, as legal tender. And this comes down to what even is legal tender. Legal tender doesn't mandate the use of anything. It doesn't forbid the use of anything either. If we want to denominate things in Bitcoin, we actually can. It doesn't make very good business sense for most businesses, as you know, the article talks about many of the potential risks of using cryptocurrencies as legal tender.
Yeah, look, it's a very, you know, this is from the IMF. We have two authors from two staff members of the IMF, Tobias Adrian and Rhoda Weeks-Brown, and they're coming out and talking about this prospect of governments choosing Bitcoin and other crypto assets as their own national currency. And they're saying no. The title says a step too far. And the elephant in the room here that does not get a single mention of the article, interestingly, is El Salvador, which is doing just this. Or at least it's not certainly choosing it as the national currency per se, but it's making Bitcoin legal tender. Now, El Salvador currently uses the dollar. It doesn't have its national currency, partly because of the failure of its previous fiat currencies. And to your point, Noelle, it's not saying now mandating that Bitcoin has to become the unit of account, the denominator. But if, under the concept of what legal tender is, somebody looks to settle a debt with Bitcoin, you are now obliged to accept that. And the government is supposedly giving a variety of mechanisms for the recipient of those Bitcoin to quickly and fairly efficiently convert them back into dollars, if that's what you choose to do. But the IMF, Adrian and Weeks-Brown are telling us that this is not a good idea because of the volatility associated with it, right? They talk about financial integrity could be undermined. There's anti-money laundering, all the stuff we've heard a lot about in the Bitcoin criticism world. And the thing that gets me about this, though, is it's once again saying, look, this isn't going to work because Bitcoin has these qualities that don't meet the definition of what money should be. It's too volatile. It doesn't have this, status of integrity that supposedly a government would impose on it, and it sort of establishes the ground rules around which you judge something, and says that it doesn't meet those ground rules, and so it's out, without, like, to the point we were discussing before, opening up the question about whether or not that needs to be the definition, or certainly, and whether or not there's a transition as well that something could go through, because the counterfactual here, of course, is like, what would it be if or rather the counterpoint is rather, what is El Salvador's other option? Can it create its own currency? Apparently not. It can only live with the dollar. So, what were your thoughts on this, Noelle?
I don't see Bitcoin replacing fiat ever. I know the article is not necessarily talking about that, but it is hinting at Bitcoin becoming national currencies, which does imply displacing fiat, I should say. I don't see that ever happening, because why would it? Why would governments even go down that route? And even discussing it's a healthy article, actually, in that it does sort of throw a bit of cold water on the excitement that many in our community started to feel when El Salvador made their announcement. The price didn't seem to move very much, which I guess shows a touch of realism. But so it's a healthy approach. However, it overlooks the main point of the emergence of Bitcoin and the role that it will play in monetary policy on a global scale. And that Bitcoin, for the very first time, offers us a choice of money that we can use. Whatever your definition of money is, Bitcoin does fill some of them, and it does offer people everywhere a choice. Up until now, we've all been stuck with what our governments have told us that we need to use. That's the biggest change. We don't yet know how governments are going to react. We're starting to see some more noise coming out from some of the regulators who are starting to realize the erosion of their consolidated power that this means. But does that mean they're going to be powerless? Does that mean fiat is going to be trusted less? No, fiat is convenient. It's convenient as hell. Bitcoin's not very convenient yet. However, I was looking at the Lightning Network figures today. Since the El Salvador announcement, the number of channels has ticked up. The amount that is stored on these channels has ticked up. Has it shot up? No, but then again, the technology is still young. It was a sea change, I think, what we saw in El Salvador, not least for the conversations like this paper that it has triggered, not so much the actual use, but that we are asking different questions.
So, what I find always so interesting about these criticisms, and this article, I think, also has this, if I'm reading it correctly, is this idea that crypto assets have become the legal tender versus a form of legal tender, right? And so there's criticism in here that basically talks about how crypto assets are not necessarily as widely accessible as you would want legal tender to be, which is a very fair criticism of crypto in general. Like the infrastructure issues that lead to limited access are not solved by, however you create a digital wallet, you still have to have the ability to access that. And that is problematic in certain parts of the world. Nevertheless, to your point, Noelle, it is fascinating to me that it's always posed as this all or nothing thing, Bitcoin or fiat, right? Crypto assets or as legal tender as the only, that has never really made sense to me. And I'm curious why you think it tends to be so extreme, even from authors like here at the IMF, right? At least, again, I'm reading a little bit into this piece, but that just seems like a very odd approach to take, given that we know that in many, to your point, the pesetas and the euro, like for a period of time, there actually was acceptance in both of those currencies while the transition was made.
I don't think the authors actually believe that this is a viable option. I think that it's an intellectual experiment, a thought process that they're going through. And they're making the point that we need to be a bit more realistic about our expectations here. Why did the Bitcoin community decide that, yes, legal tender, this is the turning point? Because we're excited, because we have high expectations, because we're waiting for the sign that things are going to change. Finance does not change quickly in our terms. It's changing very quickly in relative terms recently, but finance changes slowly because there are so many interconnecting parts. If we were to suddenly have Bitcoin as legal tender in the most developed countries tomorrow, that would be because something really bad has happened. So it's not something that we should hope for. The world in which Bitcoin is the main currency is probably going to be a pretty scary world as well. It comes down to choice. The intellectual experimentation and the debates that are swirling around that right now are the main feature. And it's just the beginning as well. Bitcoin was the first, it's the largest, it's in what most of us believe to be the safest, the most secure, but it's not the only thing. Stable coins are going to be a bigger thing in individual transactions, retail level transactions going forward, especially with some of the innovations that's happening. And this debate is all happening against a backdrop of steady progress towards central bank digital currencies, which most of us now accept are an inevitability rather than a when, rather than an if. And so the why now? Because the macro confluence of events is converging on this becoming a reality very soon, and certain rules do need to be set from the regulator's point of view, and certain expectations need to be managed from those of us that are building this industry.
I wonder whether the article, though, almost asks the least interesting question, right? I mean, I think it is just exceedingly unlikely that a government would truly adopt crypto asset as their national currency. I don't think that, again, I don't think that's what El Salvador is doing. I think they're trying to find a way to get around their dependence on the dollar. But at the end of the day, the dollar they know is going to be continuing to be, the unit of account, the main medium of exchange, and so forth. And maybe one day they'll get enough recovery that they'll start printing their own money again of some sort. I don't know. However, the thing again that I think is most interesting about Bitcoin and crypto generally is that it is a new governance system for value exchange in a digital economy that almost by definition transcends nation states. Now it doesn't. We're all still bound by the rules of the governments in which we live, but we recognize that so much that happens in the digital realm is cross-jurisdictional, is transnational, is kind of borderless. and that because of the identity challenges that come with that, and therefore sort of which nation state do you actually belong to when you're on the internet, right? The classic joke on the internet, nobody knows you're a dog. Then do we need a borderless, digitally native form of currency that isn't beholden to the whims of any particular jurisdiction? And that doesn't mean that it becomes the currency of the world, but maybe that there has to be some unit of account that starts to exist within that digital system. People, and again, a lot of the stuff that we've been talking about today is like the failings of the human brain, right? You were talking, Noelle, about the mental math that was difficult to go from pesetas to euros. A highly powered computer, or any computer for that matter, just simply doesn't have that problem. It'll immediately make the translation, right? So in a world, for example, where micropayments are being made by just browser plugins around the world to pay for access to different articles, and it doesn't matter where you are, you're paying some website, the producers are based in Macedonia, but you're in Thailand. The currency can become Bitcoin because neither you nor the actual website producer even thinks twice about the fact that the sats that are being paid for this process are being calculated in a kind of a very sort of general way by a computer. So I still think that outside of the challenges of a nation state and also of the human brain, there is this sort of digital economy that functions at high speed with potentially sort of micro transactions of value. When we get into that realm, why couldn't it be Bitcoin? It would be, or something like it that happens to, exist in a way that's transcending that, right? And then there's this other point that I think, Noelle, you and I have often talked about, is like, maybe it's not money, but maybe it's collateral, right? Maybe Bitcoin becomes this underlying smart contract driven collateral in the way that bonds are, treasury bonds are often in the traditional market now. It's not treasury bonds don't hold a stable value. They're obviously relatively stable, but it is the trust in the executability, if you like, of that asset. And one could argue executing on Bitcoin can be extremely reliable in that environment. So I don't know. There's just, it almost, to me, as I said, is not really asking the right. It's like just the least interesting question, right? And there's a different realm in which this stuff could be quite interesting. I mean, Sheila, does this trigger any thoughts in your head?
Yeah, I mean, a lot of different thoughts. I think that part of what the money is meme or Bitcoin is meme, the consequence of that is that we are so reactive to what we perceive as an ecosystem as to be gaining traction with regulators, whoever the audience might be. And currently the audience is primarily US regulators and US politicians, right? So the rhetoric around this topic area is kind of adjusting in reaction to what is perceived as kind of the most high value target audience in terms of the future of this entire technology. But over the course of time, we saw very different rhetoric when it was, tech billionaires who were kind of the target audience for this, right? And my hope is that at some point, we will get back to focusing on users and user adoption of these various different opportunities that exist within the ecosystem, whether it's NFTs, whether it's Bitcoin itself, whatever it might be, and thinking about, when we go back to those three functions of money, which of those is actually proving to provide the most real life, on the ground, tangible value to users of these systems, and how do we support with the memes, the rhetoric, the conversations, the articles, the criticism, whatever it is, the further development of whatever is proving to kind of have the most value. Now, what I think is really interesting, to your point, Michael, about the kind of wrong focus is, how do you measure, that value, right? Like, how do you actually measure what is moving, and what is it that we care about measuring? And a lot of what we measure is, of course, we observe the Bitcoin price index and we say, oh, look, that thing is happening there. Look, suddenly it's going in this direction. That means X, Y, and Z. To kind of loop back to Brett's article, that only has certain indicative value. And that value is not really high when it comes to what I'm talking about, which is what are people doing with it? Well, the price is often quite unrelated to what people are actually doing with it. And if anything, it's orthogonal in some cases to what people are actually doing with it. So how do we get away from what we've anchored on, which is the price, as and avoid imbuing that with the wrong meaning, right? Or assuming that it reflects the meaning that many of us actually do care about, which is not, my account or what the value of my account is looking in terms of fiat dollars. But how do we think about, creating new metrics around that? And this is something, as you know, Michael, we care a lot about here at the firm. We're thinking about, not just in the ESG context, but metrics in general. How do you demonstrate social value from these opportunities, which I think is what many of us believe, financial inclusion is one very focused upon use case, but there are many others as well. How do we get to measurement around those opportunities to kind of demonstrate, that this is actually improving people's lives, improving the state of the world in ways that are really important and will carry forward for generations?
Yeah, and bringing this back to a very basic question that I deal with quite often, because I focus on explaining crypto markets to investors, professional investors, and many of them from traditional type of investing. And that is, how can you have something that is a store of value and at the same time a medium of exchange? If you're buying Bitcoin as an asset to put away in your portfolio for when you retire, why on earth would it ever be a medium of exchange? And my response to that is, well, why not?
Yeah, I mean, that's a fundamental question that brings us to Gresham's law, right? This idea that good money, bad money chases out good. The actual exchange is something that you don't want to hold. You want to get rid of it, right? So there is that tension there, Noelle. It's a really, really good point. And all right, listen, this is great. Like these were I think it was nice to be able to take some real thoughtful criticism of this space. And what I think is something that you said, Noelle, that was really valuable through this is like, it's just forcing people to ask questions, which I think is what, Bitcoin and blockchain just do. I think, Mark Hochstein, managing editor at, executive editor at CoinDesk, his line that we've used a lot over here, I think is a valuable one, is like, blockchain doesn't have all the answers, but it asks the right questions. And that's what I found. In many respects, the most fascinating aspect of my journey since I discovered Bitcoin is that how much it forced me to go back and ask questions about money and about these systems that I'd taken for granted. So thank you to you both for indulging me in going down that rabbit hole yet again, which we will keep going down on Money Reimagined on a frequent basis. So Noelle Acheson and Sheila Warren, thank you very much for being with me today. Everybody, stay tuned. Come back next week for another edition of Money Reimagined. I'm Michael Casey. Thanks for being with us. Bye.